The markets have turned optimistic on the back of a stronger than expected jobs data this morning. We'll be discussing that, the latest earnings, and much more today on Money Never Sleeps. Thanks for joining us today, everybody. GM Randy. As we get going, do us a favor, like, subscribe, and remember that nothing we say is financial advice. So please do your own research for making any buys or sells in any sort of market, even the grocery market, where Kevin, boy howdy, it's a lovely day here. I hadn't gone and bought, some certain things in the grocery store in a while yesterday. And my wife asked me to pick up some diet orange soda. And I was like, yeah, cool. Okay. What's that got to be for a 12-pack? Like $5? Nope. $10. Rude awakening yesterday. And I was just like, I might need to take a look at this budget of ours because Jesus Christ, what are we doing here? But that is a tangent that probably didn't even need to be talked about. How are you doing on this beautiful Thursday, my friend?
I'm doing pretty good. A lot of the stuff that we talked about yesterday is kind of carrying over into today. Nothing really too surprising, which means that tomorrow is probably going to be the most telling to see how next week's going to play out. Next week's actually a really big week. But if we don't get too much, action in this market, obviously it's a little bit bullish here. But again, 25 points is nothing when you're 5,200 points up. It's pretty much I'm waiting to see what happens on Sunday night's open. So for right now, just taking it as is. A lot of info's coming in. A lot of earnings that came back, and some stocks that are just not looking so great. But I'm doing pretty good today. I think there's a lot to talk about.
Yeah, let's talk about the jobs data for a second. That has the markets very optimistic because the expectation was for 214,000 initial jobless claims. We got 231,000. So, 8% over expectation, give or take, has got everyone creaming their jeans, as I like to say. And the markets are thinking, hey, maybe we're going to get, maybe we'll get that rate cut sooner than later. Maybe not. From The Departed, maybe go fuck yourself.
Go fuck yourself.
All right.
I know. One of the best lines ever, bro. I know what you're talking about.
Great line. So, we had that. We still have more Fed speakers saying the usual rhetoric of we're going to wait for the data and we believe that we can keep these higher for longer. You mentioned next week we'll have the PP comes out, the producer price index, and then we'll have the CUPI, the consumer price index as well. So we'll get some data points on Tuesday and Wednesday that will, kind of dictate where we're heading from there. But until then, what else has caught your eye? Continue to see every day, at least once a day, I'm sending you in house, the latest piece of commercial real estate that's taken a 90% bath. We're seeing more and more discussion around regional banks again, and people who have more money and are smarter than us, kind of reaffirming the beliefs that we have there. I know that there's more going on in Asia. We had a huge bond sale today. We have earnings. Some of those looking better than others. Another Boeing plane issue, but we shouldn't talk too much about that because I don't want to get whacked. So, Peter Griffin said, what do you want me to do? Whack a guy, off a guy, whack off a guy? What do you want to do today, Kevin?
I want to avoid that conversation, and let's go directly into what's going on in Asia just because it's real quick. So what we found out about that intervention that happened on May 1st, since everything finally settled, apparently it was about $16.8 billion worth of U.S. debt, in other words, treasuries, that they had sold off in order to save the yen. A small amount considering, I believe, Japan has north of $800 billion worth of U.S. debt. Now, they did say that they're willing to do anything in order to protect the yen, protect that peg, because as we've seen, wages are growing at the slowest rate in over 20 years in Japan. The yen is losing value against the dollar, and it's also scaring them because that could cause inflation at a time when they're trying to raise rates, right? They're trying to combat inflation. Their target goals, just like how the Fed has target goals of inflation, might get out of whack, and it's already happening too soon before they even started raising rates a significant amount. The interesting thing is, if they continue to let the yen rise at this point, they're a country that imports pretty much everything. It's just going to make their import prices significantly higher. Also causes them a lot more pain for their consumer, and also every time they intervene, it also is pretty inflationary for them as well. So it's really interesting to see what's going on there. But we found out last night that the BOJ is willing to sell off not just some, not just a few, but all of their ETF holdings. And that scared the shit out of the Nikkei. You and I were talking about this. Maybe they're looking to buy back some of that. We do know that a few weeks back, or even maybe about a month ago, maybe it was like in March, they announced that they weren't going to be buying any more assets, which is not necessarily a bullish thing for your federal bank to be saying, central bank, I should say, for Japan. But it's just extremely problematic, and we continue to see that. And I do want to show you guys one thing real quick on the yen. So it's actually a three-pronged thing here. We'll go into the yen being important. After they intervened, they went all the way down to about 151.87. It's bounced back and it continues to climb. And that's climbing up low volume right there. Why is this problematic? Because right around this level is when it spiked up to 160, and then that's when they had to kind of intervene in those days that followed that weekend. So I'm really interested to see if there is any more room to the upside. We're pretty low on the stochastic RSI. I don't think that the moves that they're making selling off debt, the small amount that they did, is helping them in any way. So they might have to go to more drastic measures, which include selling off those ETFs, along with selling off some of that U.S. debt. But this absolutely spooked the markets last night in Japan. It actually opened up higher, and then it got rejected on the 50 moving average and decided to close lower, and it's falling out of this this little flag right here. So it tells me that maybe we are going to roll over a little bit in Japan. At 200 EMA right down there seems like there's a chance we could be testing that. We probably won't see that until next week, if anything. Even if we fall out of it, or if we're going to break back into it, it's going to really be dependent. Kind of seems that's why we're rallying into the weekend here. But what's happening here is the dollar should be getting stronger, but today it's having a pretty bad day. Now we have to question why. Some people think we're rolling over once again. I completely disagree. I think that we're just putting in a bit of a correction, whether this is an ABC or whatever. I'm not going to go into it, but the daily stochastic RSI is extremely oversold. It's coming out. It's probably going to be moved to the upside. We got the 15 to 200 that are acting as our support, so I'm not necessarily too concerned. The other thing is the reason why this is absolutely plummeting here is because our friend over here, gold, rallying like crazy once again. But why is it rallying? It's in another parallel channel. So there's a lot of things that are just absolutely lining up where each thing is fucking the next thing over. But there's signs that some of these things aren't necessarily going to be holding as strong. I think gold, if anything, is in a downtrend now. We're putting in a lower high. I think that we're going to get to a point where people are realizing, oh, maybe this isn't the time to be in gold. Usually gold sells off pretty well. I think right now it's kind of people are scared. They're not sure. So the fear and greed index right now is below 40, but the S&P and the Dow have been up for the past few days. So it's really funny to see how sentiment really has shifted. People are definitely scared of something. We don't know what it is yet, but eventually this gold is going to turn back. I think we're going to see it pull back significantly to at least a 50 moving average. If not, if we lose that, we're coming down a lot lower, because this is the all-time high where we currently are at in this range up here. Probably going to go down to the 200, which could be a really big move for the dollar and absolutely crush the yen in the same time. So it might be forcing a hand at some point in the near future. And once again, looking back at this, just every time you get up to this trend line, you do get a pretty big retracement in the months to years that follow. Once you got to this trend line up here in 79, right around the time inflation kind of peaked. What was that? That was, what's his name? Paul Volcker raising rates like a madman. 66% retracement in gold. Back here in 2011, that was around the same time that the Bank of England, I think European banks were having a lot of problems. You saw a 45% retracement following that. And here, where can we kind of see where there could be a retracement? Possibly about 40% for gold. Where would that put us roughly? It put us right around the 200 EMA at about 1400. So a lot of people that are buying up here, if they're holding long term, might be forced to sell off, and that kind of helps out the dollar, but also kills the yen at the same time. So we're kind of looking at this as a short-term trade that people are making that they probably shouldn't be. But if history repeats itself as it has in the past, this is possibly one of the worst times to be buying gold. Not financial advice, just something that we've seen.
Do not tell Peter Schiff that. He will come over and like literally piss on your Cheerios.
He definitely would. And he would make sure that no, I wouldn't even say that joke, but it's put it this way. It's it was bad. What I'm looking at here with gold is that a lot of people, there is a bit of a trade here that will come in the short term, but if we look at this over the next 2 to 3 years, there's a good chance that gold could pull back significantly. A lot of people that are bearish are bullish on gold. I disagree with a lot of bears right now. I think that there's a lot of noise. People aren't necessarily sure, and that kind of uncertainty should be shown in other products, especially in volatility and VIX. But we're not seeing that. We can get into that in a little bit. But that's kind of what I'm seeing with Asia and
Let's go
currencies.
into that right now. Let's go
All right,
into
cool.
the VIX. It is sub 13. I mean, if you look at the daily, back, the 19th of last month, we were at 21, and we have seen just the VIX get absolutely crushed here to this sub 13 number.
Yeah.
What is there? And not financial advice, what the fuck ever. Is there anything actionable, but whether it's in gold, in the VIX, like anything actionable that you view in the short term, let's say in the next couple of weeks?
Yeah, absolutely. It depends on how much risk you want to take. And right now, a lot of people are choosing not to buy insurance on the VIX. I have been buying short-term puts on SVIXY, which is an index that shorts the VIX, because when the VIX does start to blow up, like in other words, go straight up, those funds bleed out faster than any other product. And that's kind of why I've been betting on that. So I'm looking at June 21st, and I think I put $30 yesterday to make 5,000 if something bad were to happen. So there's like small term bets that you can make in terms of options contracts that could benefit you. Question is, it might not hit this OpEx. It could hit possibly the next one or the next one. So you always want to kind of, assess that type of risk. So that's what I'm kind of doing here. I don't buy this one bit. That's just my personal opinion. I'm looking at the VIX right now, and yesterday it was going down when the market was going down, and this morning it was going up when the market was going up. Now we're seeing it kind of diverge here from the S&P. But again, I've said this before, and I'll say it again: people are not buying the insurance on the equity markets. And the equity markets we looked at yesterday look like absolute shit. There's so many warning signs that we need to be cautious of. And that kind of mentality is very dangerous, because we do know who's on the other side of this short volatility trade. It's the market makers. They're buying the other side of that trade. And at any point, if they want, they can unload that. They did the same thing in 2018. They kind of did the same thing in 2020. So with me looking at the OpEx that comes next week on, I believe, Wednesday, the same day that CPI gets dropped, and when there's $5 trillion worth of S&P related equities that are going to be expiring, those contracts, it's bigger than the past 4 months or so's OpEx in terms of how much volatility we could see. That's just one thing that I'm saying. So when I look at the VIX here, it's at 12, right now, 12.87. I've been buying since 14 and a half about, and I've just been kept on, DCAing into these short-term contracts. And if I'm wrong, it's $200. I don't care. But if I'm right, obviously, you're on the side of the trade with the market makers. So that's kind of my mentality moving forward with this. But when we look at the S&P, this is what scares me, and it's getting worse by the day. We're going into the weekend, right? And the weekend, obviously, the markets are closed. You can't really do anything, and the volume keeps fucking dropping. I mean, this is you have to be a madman to not see this bearish divergence here. This is dropping as these are going up, and you're in this parallel channel, and this is an ABC corrective pattern. And it's what the scary thing is too for a lot of people that aren't necessarily paying attention is with the top of the market. I do believe has been put in. I think it was put in back here in April. But if this is what I think it is, this is a 5-way move to the downside. You're probably looking at like sub 4,800. And then that's just the wave 3. And, wave 5 could go a lot lower. Wave 5 could take us to about 4,600. And that could be just the first small move. But that type of move that quick off of something like the S&P dropping, say, 90 to 100 points given next week, say Monday morning limit down, something happens over the weekends and people don't have that insurance, that kind of causes it to even sell further, because people are trying to cover their positions for being on the wrong side of a trade, and that kind of allows it to unwind faster. So it's a very dangerous weekend in the market, in my opinion, knowing that we have OpEx and all these contracts. We're already seeing some of these stocks pull back, but if we look at some of the equity markets, NVIDIA, I mean, that's even pulling back a little bit. Nothing crazy, but I assume they would be climbing into this. It's not necessarily, so we're gonna have to keep an eye on that. Obviously, there's other ones too. Like, let's talk about Shopify. The earnings came out yesterday. I just want to show everyone this chart. but it dropped 18.59%. It's the largest drop that it's ever seen in the history of the company, right? So there's a lot of things that are within these indexes that are really weak. All you need is like an Nvidia or an Apple or one of these ones or a couple of them to absolutely just kind of shit the bed come Monday or Tuesday or Wednesday with CPI. That index could unwind faster than you absolutely think. So that's kind of where I'm standing with what we could be doing with the VIX. With gold, I just don't necessarily want to touch because I do know that China is heavily invested in gold right now, and I don't know what they're doing. We could look at China maybe tomorrow before the weekly close because I think there is some actionable stuff there, but I'm not getting involved with gold. I think right now for me, low risk, high reward, putting out what I can afford to lose in order to make, maybe possibly some money because I'm betting against people just being dumb here. That's kind of, I hate to say it that way, but that's kind of what you have to do.
In the history of mankind, betting against people being dumb and not acting in their best interest has been a pretty sound strategy.
Yeah, I completely agree. But yeah, that's kind of what I had on the VIX. I know it's kind of long-winded, but it's kind of what we're standing here. It's a really weird place where the volatility products are not reacting the way they should. And here, last one, SVIXY, the one that I am shorting. And again, I'm just telling you guys because I want you to know that this is the only risk I have in the market for the time being, in terms of short term. The reason I'm shorting this thing is because if we look back at 2020 when COVID happened, this is from the height there down here. Obviously, that's a 61% drop, right? So a lot of positions that were out of the money went into the money. And then the biggest one here is Volmageddon, right? You were at $278 per share. I mean, it went down to about $19 per share, a 92% drop. So when volatility unwinds, it unwinds fast and it unwinds nasty. And if you're on the right side of the trade, obviously there is money to be made. So just something to think about, not financial advice whatsoever, just something I've been very much keen in watching.
All right. That is where you've been keen as of late. Pretty boring day in the market overall. You mentioned Nvidia down just under 2%. We're seeing kind of a mixed bag here across the board. What in the crypto market has been catching your eye? Bitcoin dominance, we've been keeping our eye on that. Pretty flat on the day. Seeing a few alts, a few meme coins here and there have a good day. Solana kind of leading the charge for a lot of the alts, getting back the losses from yesterday. Anything in that area that you want to discuss?
Yeah, let's just start with Bitcoin again. Let's get out of Bitcoin here, but we'll do it after this. Let's just show you here. It found support on the $60,000 line, right, where it's bounced off significantly in the past few weeks. Maybe it has a bit of a bounce. I think the important thing to watch here is even if that's finding support there, where are you finding resistance? Right now, it seems like you're finding resistance on this 50 moving average, right? And the volumes are pretty low. This is also on Binance. So we'll change it over to Coinbase in a second to see if we can get more volume on that. But, you're finding resistance on that. And I think that's more important than the support that you're finding, right? Because you're kind of trapped between the moving averages. Eventually, this moving average is going to start coming down because you keep getting knocked down from it. And you're going to have to try and find support. But, past this 57 mark that we got back here, you're looking at 52K. And that's going to be the main target that we're watching. If you're able to break this resistance, then maybe there's a chance that you could come up to about 74, 75K. That's just something that we have to take into account. But I just don't buy it. I think that the 50 is acting as really good resistance. And, you can only hit your head on it so many times before you finally break it and, come to the downside. Or, it breaks Bitcoin and it comes to the downside. Let's look at Coinbase just to see how volumes are looking. Fairly similar. Volumes are extremely low. Doesn't seem like there's a lot of trading whatsoever going on here. And that's the other thing too. Bitcoin's going to be open this weekend, right? If anything does happen, that's probably going to be the first indication that something is not going to be so pleasant come Monday morning for a lot of equities. I wouldn't be surprised too. If we continue pushing like this, we get maybe one little fake out push up to the upside. It could be something as simple as A, B, and then C. It doesn't have to go up all the way, but just puts in a little bit of a lower high, and then we just see it, a lower high. There's the high, lower high, lower high, lower high, and then, it breaks down from there. So that's kind of what I'm seeing with Bitcoin. The alts right now seem like maybe you get a little bit of a bounce. maybe. See, I don't even believe that either. I'm sorry. I thought so, but I'm looking at some of these things, and it just seems like everything right now is in a parallel channel waiting to go lower. It's not my opinion. It's just what I'm saying. You're below the 50 and the 200 on Matic. See what AVAX is doing. Same exact thing. It's a parallel channel. It's below the 50 and the 200 currently right now. I mean, eventually a death cross could come. You're going to get a death cross here on Link. This seems like more like a wedge. It's getting to an apex or a climax at some point. This is looking like it's rolling over in total.
Wait till you're off camera to come to a climax, okay, bud?
Yeah, I know. It's I'm excited, but not that excited, not just yet. Looking at total 3-2, you're below the 50 moving average, and the 200's down here. So if you keep finding resistance on these things, total 2, same thing. Keep finding resistance. You're coming down to that 200, and you better fucking hope that holds if you're bullish on this market. But I have a funny feeling that we are out of the bullish phase for crypto, and I will go back to USDT being the indicator of that. You put your high here in April, March of 2024. You put your high in here in November of 2021. You did the same back here in April of 2021. Did the same here in February 2020, right before what happened. And then June 19th, June of 2019, once again, you put pretty much your local high in at that point. I think we put in our local high, and now we're going to start to see some of this money flow into stable coins. Whether it holds or not, I don't know. Whether Tether's still here in a year, I have no idea. I think that they'll get delisted, but that's just my opinion. So I think that crypto right now, if we're looking at this and trying to be smart about where it's going in the next 6 to 8 months, this is the chart that's giving the game away. Everything else in the short term is just showing you that we're having a lot of resistance, and it's hard to find money when people are losing their jobs too, and a lot of capital is kind of like not being created because rates are at 5.5 and they continue to stay at 5.5, and these banks aren't issuing new debt, and people just don't have the money on hand or the credit in order for them to loan out to them. So it's a very complicated matter, but I'm pretty much saying that no one's coming to save the crypto market, and I think it's going to be pretty soon to the point where we realize that Bitcoin chart we were looking at yesterday is pure Wyckoff distribution of people who have assets that are selling to people who want to buy these assets, hoping that they can make more money. I don't think that's going to happen for a lot of people who are buying up there. That's just my opinion, not financial advice.
Not financial advice. All right. I think that about covers it for today. We'll be back tomorrow to wrap up the week, heading into the close. Any final thoughts, Kevin, before we head on out of here?
I don't think a lot is going to happen until tomorrow, and maybe in the last hour of trading. Even if so, it could stay fairly green. I think just watching Asia being vigilant, and then maybe he's just seeing how people are reacting. Seems like there's a lot of top signals at least in the short term time frame. So just be vigilant. I'm not saying to act or not to act, but don't get your hopes up.
All right. Well, with you around, we can never get our hopes up, Kevin. That is going to do it for today's show. Appreciate y'all for joining us. If you have not yet, like, subscribe, comment. Oh, I think my kid spit up on my shirt a little bit or something. All right. I got to go do some laundry, apparently. We will see you all tomorrow. Stay safe out there. Love you guys.
Take care, everyone.